Ever tried to like buy concert tickets or, those limited edition sneakers everyone's after, and then suddenly it's like poof, gone.
Yeah.
Someone with way more money to throw around just cleaned out the whole inventory.
Yeah.
That's kind of what it feels like with Bitcoin right now.
Hmm.
And we're going to take a deep dive into why this matters. Even if right now you're thinking, a Bitcoin wallet, isn't that where you keep actual Bitcoins?
Right.
We've got a whole bunch of articles and analyses to unpack, and they all come back to this. What happens when the most famous cryptocurrency in the world collides headfirst with like big companies on a major buying spree?
And it's a collision we can't really ignore because Bitcoin, it's got this unique DNA. It's not just your run-of-the-mill supply and demand thing. Bitcoin is literally programmed to stop at 21 million coins total. That's it.
Yeah.
So when a big company waltzes in and buys a huge chunk of that limited supply, well, the entire crypto world feels the ripple effect.
It's like you're all set to get those concert tickets. You're competing with other fans, and then you find out you're actually up against a company that just bought out the entire arena.
Exactly.
And in this deep dive, one name keeps popping up: Marathon Digital Holdings.
Yeah.
They made headlines recently by buying up 5,000 Bitcoins.
Wow.
I don't know about your bank account, but mine can only dream of making that kind of splash.
That's a huge GE sum, even for Bitcoin. And it highlights something really important that often gets lost in all the excitement. Companies like Marathon, they're not treating Bitcoin like your everyday spending money.
Right.
They're not using it to buy things or even trying to cash it out for a quick profit. They see it as this long game, a digital store of value, like digital gold. They're betting big that because there's a limited supply, its value will just keep going up over time.
So it's less about, hey, I'll grab a latte with my Bitcoin, and more about locking it away in some digital vault, hoping it'll be the next Hope Diamond.
Exactly. That's where it gets interesting because it challenges how we usually think about investments. It's not just individual investors trying to outsmart each other. Now you've got these major players like Marathon basically placing a massive bet on Bitcoin's future.
And they're not the only ones making waves. We've also got MicroStrategy,
Right.
a company most people probably wouldn't recognize if it was right in front of them. But they're quietly building a whole Bitcoin empire.
Yeah, and they're fascinating. They're what we call institutional investors. We're not talking about your typical tech giants here. We're talking big players like hedge funds or corporations that are used to investing huge amounts of money. MicroStrategy has built up a Bitcoin portfolio of over 250,000 coins.
Wow.
Which tells you a lot about how much they believe in its potential. Their CEO is basically saying, the future of this company is riding on Bitcoin. And you can be sure that other institutional investors are watching very carefully, trying to decide if they should jump on that bandwagon too.
Okay, so we've got Marathon, we've got MicroStrategy.
Yeah.
These Bitcoin whales, as some people call them, gobbling up Bitcoin like it's going out of style, which I guess given the whole limited supply thing, it kind of is.
Yeah.
But that can't be good news for the average investor, right?
Where does this leave them? Yeah, it's a valid concern. It's like you want to buy a piece of beachfront property, but every inch of the coastline is owned by these mega resorts.
Right.
That's the potential scenario we're looking at. If these big institutional investors keep scooping up all the Bitcoin, it could absolutely price out everyday investors.
So is the dream of owning a whole Bitcoin like totally out of reach for the average person? Are we all just going to be stuck watching from the sidelines as Bitcoin becomes this exclusive club for the ultra wealthy?
Not necessarily. Remember, scarcity works both ways. The same limited supply that makes Bitcoin so attractive to these big players also drives its value up for everyone. Early investors, even those who just have a small amount, could see incredible returns.
So it's all about getting in early. But haven't we already missed that boat? Bitcoin's price has gone through the roof over the past few years. It's got to be too late for the average person to get a piece of the action, right?
That's where understanding how Bitcoin can be divided comes in. You don't have to buy an entire Bitcoin to get in on it. You can actually own a fraction of a coin, like a tiny piece of the pie.
So instead of buying a whole share of, say, Amazon, which is like, what, over $1,000 these days, you're saying people can buy a fraction of a Bitcoin.
Exactly. And that's what makes it really interesting for individual investors. Because those fractions, even if they seem small now, could be worth way more down the road. If Bitcoin keeps heading in the direction it's going, it's definitely a gamble. But then again, isn't every investment to some extent?
Okay, so maybe there's still hope for us regular folks. But this whole thing does bring up another question. With all these huge companies stockpiling Bitcoin, will individual ownership even matter in the big picture? If Bitcoin becomes this super valuable asset, aren't these big players going to be the ones calling the shots?
That's the million-dollar question. And it really gets to the heart of this idea of power dynamics in a decentralized world.
Hmm.
So we've seen it time and time again throughout history. Concentrated power, even in the world of finance, it can cause problems. Monopolies stifled innovation roadblocks that prevent smaller players from even entering the game. Think back to the early days of the internet.
Right.
A handful of powerful companies were controlling access and dictating the terms.
Yeah, and we all know how much fun monopolies are for the average person. They're not exactly known for being consumer friendly.
Exactly. However, and this is where it gets interesting, this very scenario might be the push we need for new solutions to emerge. This tension between concentrated ownership and the ideals of decentralization, it could actually fuel the next wave of financial innovation.
So are we talking about like a full-blown crypto revolution here?
No.
Will Bitcoin like splinter off into a million different altcoins and each one is owned by like a tiny group of people?
It's not really about splintering, but more about finding ways to make access and ownership more democratic
Yeah.
within the existing Bitcoin framework. Think of it this way. Just because right now a few companies own massive server farms doesn't mean you can't still use the internet and enjoy all its benefits.
Right.
In the same way, we might see new platforms and technologies popping up that let everyday investors benefit from Bitcoin's growth, even if they don't own a whole coin themselves.
So it's less about like overthrowing the system and more about finding a smarter way to work within it.
Exactly. We're already seeing the early stages of this with things like fractional ownership platforms and DeFi, decentralized finance.
Right.
These innovations are shaking things up in the traditional financial world, making it possible for people to invest in things that used to be completely out of reach.
So while those Bitcoin whales are busy building their digital Fort Knox, a whole new generation of investors could be figuring out their own ways to strike gold.
Precisely. And that's what makes this whole space so incredibly exciting. While this influx of institutional money definitely raises valid concerns about accessibility, it also creates this environment that's ripe for disruption and innovation. It's like a tech arms race, pushing the limits of what's possible in finance.
A little bit scary, a little bit thrilling, all at the same time. So as we wrap up our deep dive today, what's the key takeaway for our listeners? What should they be thinking about as they venture into this new frontier of Bitcoin and these massive investments?
I think the most important thing to remember is that the future of finance, much like the future of technology, is rarely ever a straight line. What seems inevitable today could be completely turned upside down by some new invention or a sudden shift in the market tomorrow.
Right.
So stay informed, stay curious, and don't be afraid to explore those less conventional paths.
Because who knows? The next big thing in Bitcoin might not be about who owns the most, but about who comes up with the most innovative ways to participate. That's something for all of us to keep in mind, even though those concert tickets are still sold out.